Okay, folks, welcome back. Weekly review for week ending May 24th, 2019. I appreciate your patience. I wasn't feeling well yesterday. I ate something that did not agree with me. So we're back on schedule here. So economic calendar going into next week. Obviously, we have a bank holiday in the States and GBP. Let me preface it by saying this. Because of the seasonal tendency, the holiday week, the beginning of the summer, this week can be consolidated, a lot of seek and destroy type scenario. So just be mindful of that. Try not to push too hard. If you think about what I gave in terms of the weekly challenge that I share on Twitter, I was only saying 30 pips, look for that. And that's about the horizon I have for the week. Now, I'm comfortable with being proven wrong. It could create some kind of crazy price run, higher or lower. I don't care. My personal expectations are for this week, it's low. Okay, so probabilities are very, very low for me, and that means that I'm not going to try to do a whole lot. So moving into Tuesday, we have consumer confidence for the dollar at 10 a.m., still rather light on the economic calendar. Then on Wednesday, we have Bank of Canada rate statement at 10 a.m. and overnight rate. So Wednesday is going to be like the big mover for the loonie. Thursday, we have a bank holiday for euro, and then we have 8:30 a.m. a current account medium impact for Canadian dollar, and then preliminary GDP for the dollar high impact, and FOMC speaker at noon, and for Canadian dollar at 2:15, we have a high impact speaker, and Treasury currency report is tentative on Thursday as well. German preliminary CPI for euro on Friday, and GDP high impact for Canadian dollar 8:30 a.m. Price index and personal spending for dollar on Friday, again at 8:30 a.m. and then 9:45 we have Chicago PMI. Then we have consumer sentiment revised at 10 a.m. and at noon we have another speaker. So obviously Canadian dollar is very, very, very heavy on news this week. So we'll be looking at what we do on Monday, how the markets sit at the end of Monday's close, and I'll have an update on Monday night for Canadian dollar in the form of a chart and commentary that way on our forum. So when we go into, like you did for this video and every Wednesday and every weekend review, the area that we do our links for these videos, Monday night I will have a chart and some commentary relative to the dollar CAD. It won't be a video, it'll just simply be a chart, because obviously I'm going to be celebrating the holiday with my family, and I'm just going to throw together a chart based on what I see in terms of how the dollar CAD has set up or closed Monday's trading. Okay, so we'll have that going into Tuesday, and then I'm sure I'll have some filters for Tuesday's price action that'll be used for the expectation on Wednesday for dollar CAD. All right, so dollar index. We have the daily chart here. And we had a run up into consequent encroachment at 98.40. Remember, that's that weekly SIBI. And the midpoint between filling that weekly SIBI is that red line here at 98.23. The previous high, shown here, is 98.03. So we had a perfect 20 pip run on liquidity above the high here, and it hit consequent encroachment, which is again the midpoint between any fair value gap or liquidity void, BISI or SIBI. This order block here, this is the one I'm watching. So if we continuously drop, I want to see how we react there. Okay, and let me tell you the reasons why. See this volume imbalance here, where there's no candle's body on the downside? We do see it run up through this. So yes, price has been offered more efficiently between this candle's close and this candle's open with this candle here. Yes, we also had this candle trade down with its wick, and it traded again ultimately almost twice on the downside. I just think that this is enough to warrant attention to the last down close candle. So it's acting in much in the same way I like to look for fair value gaps to form to qualify a strong order block. I'm using that same type of mindset here. I'm not fully convinced that, again, this is the high. I just think that this was a logical area of an old high. They're selling it, selling it, and selling it. Maybe we have topped. But again, you know my style. I'm not trying to predict long-term highs. I'm not trying to do that at all. We like to look for targets and scale out at logical levels like that. But to call a complete and utter reversal of long-term trends, I just don't do that. So what would change it for me? I want to see, and I would need to see these relative equal lows. They have to trade below this, okay, and then come back up and find some resistance there. Okay, so in other words, it has to trade down through the equal lows, make an attempt to rally, and don't go lower. If we can come back up and keep price below these equal lows, then and only then would I consider probing the sell side of dollar. That's a lot to demand on dollar. Now, obviously, if it just careens on lower here and then takes out this low, that would be a definitive change in long-term trend for me. Then I would be comfortable going in looking for shorts. But right now, I'd like to see it trade down below the equal lows, try to make a rally, fail at that, and go lower. Once it does that, I would trust this as a turning point in both scenarios. But obviously, it doesn't need to do all the acrobatics I've mentioned here. That's just a scenario I would like to see to justify moving into, at a slower pace, a bear stance on dollar. But again, it all changes if we just get continuously dropping through and make a run rate for this low. Because if we take this low out, then my eyes would take me right to this low and here, and then the BISI here. So I'm not trying to say, I'm not trying to sell, I'm not trying to promote the idea that we've turned. I'm just waiting to see what we do here. So if we get some kind of a scenario that sees price trade here on the dollar at the order block, and we get some SMT divergence, time of day, liquidity, and PD arrays all in alignment, then I'll still try to work with the bullish side of the dollar. But again, you know the things I'm looking for that would change that. But until we do those things, I'm not letting go of the bullish side of the dollar. Okay, I'm not going to do that. I'll give you a scenario as the reason why. We had equal highs here, failed to go above it here, one little run above there, and we gave back a little bit of ground. But one more time, we rallied higher. So to me, it feels like they're dangling a carrot, okay, or holding a cookie out for the bears and say, here, sell the dollar, come on, sell the dollar. And then they could violently send this thing higher. So I don't want to pick the top on the dollar. I don't want to do that. I'm comfortable with letting it fall, and just going over gingerly and picking it up after it's proven that my analysis on the upside and bullish side of the dollar is wrong. And that's okay. I can be wrong there, because if I'm wrong, I'm going to know what makes it wrong for me. Well, I've given you the two reasonable scenarios that would, in my mind, from my personal perspective, change the view I have on a bullish dollar. Okay, so I think if we take out this low in any measure, we have proven that we've worked the premium side of this range, and now they're going to want to try to take it down into a deeper discount. And to me, logically, that would be clearing all this up and down here. And I don't think going down here gives us a long-term entry for a bullish continuation. I think that would be just a target on the downside. Okay, and then we'd have to see what the market structure is at that time. But right now, I'm still bullish dollar, and I'm watching this order block here. Moving on to an hourly chart, you can see we have pretty nice symmetry. Old highs in here. We had a 25 pip run above these relative equal highs. 25 pips, this takes us just below the consequent encroachment, and then it went like maybe a half a pip or so above what the level for consequent encroachment called for. Again, consequent encroachment is the midpoint of the weekly SIBI that we've been talking about for ages now. Hit that, and then reversed and traded lower. This down close candle right in here, see that? This is what I'm forming the basis for a breaker. And the narrative has been supported with this run back up into it here. And we saw a further erosion on the downside. We have a liquidity pool in the form of sell-side liquidity relative equal lows, and then we have a fair value gap here as well. And then we have equal lows as well, and then another fair value gap, and another fair value gap down here, and then liquidity resting below here. I think that if we maintain price below the breaker, this is the sell-side liquidity they're going to attack this week. Now, it's not much of a range, admittedly, but again, I'm not expecting a whole lot. If we get some kind of momentum below here, then we'll look to sweep in here and rebalance some of this. I don't think that if we get down into here or here, that's going to be the basis for support. I think they'll want to take this low out if we get into here, but they're just targets on the downside. And that would obviously promote some upside potential on foreign currency. Moving on into a 15-minute chart, you can see, again, the relative equal highs, 25 pips. You see the numbers here. That's where it takes us. And then consequent encouragement is where it ultimately reaches for. Then we have a 15-minute breaker here. And price trades through it, trades right back up to it. This touch right there, that's enough to trade off of this premium array. Hitting that, price makes a run for relative equal lows here and here. Well, they're not really that close in relative terms. To me, they are. It's not much in terms of pip difference. The liquidity pool rests below here, but it could be trailed from here on anyone that's long. So they rode all the way down through this one and here. Creates a SIBI. Beautiful rebalancing. Price creates a fair value gap in here, an opportunity for an expansion on the downside, and from this low to the low here is a 15 pip run. So very, very nice symmetry. Using the runs on liquidity theory I gave you for stop runs, using the 10s, 20s, and 30s, or the 5s, 15s, and 25s. Beautiful. If you look at the price swings in here, this is here about 15 pips. So we're seeing about 15 pip price run from short-term high to short-term low. That's the kind of like the criteria I use to see what, because I know what you're thinking. Well, Michael, you talk about the 10, the 20, and 30, and then you talked about the 5, the 15, and 25. Which one do I use? Whatever the market structure's showing, because it's going to be working with the signature of one or the other. IPTA will shift in and out of those two modes. Okay, now they'll have the 10s, 20s, and 30s in terms of moving above or below old lows, or above, 10, 20, or 30 pips below old lows, or 10, 20, and 30 pips above old highs. If you don't see the market creating those turning points on that, look at it from the perspective of 5 pips above old highs, 15 pips above old highs, and 25 pips above old highs. And reverse is said for 5, 15, and 25 below old lows. Okay, they're the only two scenarios. There's only two. And obviously the easiest way of doing it is use the lower end. If you use the lower end measurements, you're not going to get the actual turning highs and turning lows, but if you're using it for target purposes, it doesn't matter. You've already seen that I'm many times 15, 20 pips early exiting. If I have an objective that reaches for a specific price level, I'm getting out 15, 20 pips before that, because I want to know that I'm getting out while the market's moving in my intended direction of profit. And I don't really care about getting, let's be honest, I do care about it. I really want to be out at the really, really low and the really, really high swing points. And I've done enough of it to show on social media that it can be done. But in a real world sense, as a mentor, I'm teaching you don't depend on that, because it'll break your heart a lot. Because it'll just get right to it, your limit order won't fill, and it'll turn around. It's very frustrating. All right, so moving on into euro dollar. Okay, so here's our daily. Now, I have noted here the May 30th, 2017 low. That's what that 111.08 is. And it's also right below the old low here, which we mentioned last week that it looked like it was going to try to make a run for that. It did. Hit the May 30th, 2017 low. Look at that on on your daily chart, just zoom out. I'm not doing it because I'm doing a PowerPoint presentation to help me get through this more efficiently by way of time. But it runs that low here and hits the May 30th, 2017 low of 111.08. And then we had a nice reversal. Notice that it's happening at the same time that the dollar hits that consequent encroachment. And it also hits its 25 pip run above and 20 pip above its important highs on the dollar. So we had symmetry there. SMT divergence, I'll leave that to you. You can look at that. You know how to do it. We had SMT divergence across cable and Eurodollar, and with the SMT with dollar index. So there's a lot of things that supported, expecting some market reversal profile, especially on Thursday when we see the weekly range high and low usually form. So where does it leave us now? Again, much like the dollar index, I'm not trying to pick the very low on Eurodollar because it still has some downside potential with its weekly BISI, much in the same vein that we have that unfilled weekly SIBI on dollar index. But with that said, the buy side liquidity pool I've had mentioned here for weeks now, that may be the draw on liquidity. They may seek that this week and still be inside this consolidation. How we run above here, if personally I think if we get up here and take these equal highs out, if we run this, then I think we'll have market structure in place for intermediate term and potentially a long-term low for euro. But again, it needs to trade here, clear these out, and then I would consider probing the long side for euro dollar. Euro dollar hourly chart. We have equal highs here, so that may be what we sweep initially. We have a BISI, buy side imbalance, sell side inefficiency. So if price comes down, okay, if we trade down into this and close that in, that could be an area to find some support. If we trade through this, then I think the low will be broken, and we'll see a resuming of the downside. This is our near-term catalyst for that, okay? So price can come down and fill this in. Bulls would be better not to see it come down here. But if it does, this is the line in the sand. It needs support here. Otherwise, if we trade down below it, there's nothing down here except for the liquidity that they're trying to, in my mind, engineer. Okay, I think this is engineered liquidity for right now. Now, I could be wrong, but if this doesn't support price, in other words, if we trade down, close this in, or go to consequent encroachment, which is the midpoint, if it does not support price there and trades through it and lower, they're going to make an attempt to go back down below here. Okay, so that's what I'm thinking for Eurodollar. But right now, again, with the weekly profile in mind, mixed, choppy, seek and destroy, I'm expecting these buy-side liquidity rated. It could really spike up a little bit more and maybe reach for something higher over here. But right now, this is just too obvious not to pay attention to. So it could spike up, or could open up above here and then trade down. And this would be an area to watch again this week. This is, again, the very critical level for me. If we lose this is the reason why I'm saying this. If we fill this in other words, whether we go up here first or if we just come down first, either way, if we trade in here, fill this in, and trade down to like 111.65 to 111.60, if it goes there and fails to rally and just keeps on going lower, expect that low to be taken out. Okay, because it's just a lot of folks have been short euro, and this was a really nice area to take and cover profits, and we've seen some short covering there. Is this a long-term term? I'm not convinced of it yet. So moving into a 15-minute time frame, that BISI, you can see it's been refined in a 15-minute time frame. Now it's just simply this area here. Okay, so that becomes 111. What is that? 111.55 to 111.58-ish in there. So it's been really refined to that. So we've reduced the BISI to a fair value gap on the 15-minute time frame. And then if you really want to refine it, you just trade to the round 0 level or 5 level. And that would be the level that's inside of the high and the low of the fair value gap. Find that 5 or 0 level and generally that's what the price is going to reach for IPTA. We have a breaker here. I sent you all a chart by way of Twitter, and I was pointing to this. Okay, go back and look at Twitter, my long trade on Eurodollar. The reason why I went long was based on the fact that we made a run below these lows here. We hit the 111.08 old daily low on Eurodollar's daily chart, and we had SMT divergence across the board with USDX and correlated pair SMT between Eurodollar and cable. So I was trading on that, and I wanted to see the liquidity up here, but then also was pointing to this as a potential breaker. So we traded above it. Here's the hit on the breaker, and then we saw the rally higher. Relative equal highs, we had a 25 pip run above that. Takes us right into the high formed for Friday. So again, anything on the downside, if we come to here and we trade below this, then I believe that this low is suspect and I want to take it lower. This low to here is a 20 pip run on liquidity. So you can see IPTA's working in very specific patterns. It's either the 10, 20, and 30, or it's the 5, 15, and 25. They're the only two cycles it runs for. There's no randomness outside of that unless we consider big figure levels, which incorporates another spectrum of 10, 20, and 30, or 5, 15, and 25 beyond the new figure. And you know that by the mentorship. All right, so cable. This is our daily chart. This series of two down closed candles. Notice that the bodies of this candle is lower than this candle here. This is one singular candle, and it does wick lower. But this candle here is what I'm referencing. Midpoint of that, only the body, takes us right down to the low formed on Thursday. So this is the mean threshold of this bullish order block. There's the high of the body. It really isn't on there. I think it stopped me over on here. In other words, the MT4 snapped over to this candle's close instead of being up here. So it doesn't make a difference. It's close enough. But that level trades to here. And then we had a little bit of reaction, which we talked about as consequent encroachment on the daily with this fair value gap here. But it leaves buy-side liquidity. Also, some inefficiency on the downside and the old low. So I basically outlined the premium arrays that you should be watching for the daily chart. So I did a little bit of homework for you here. But I think this is going to be where we're going to try to reach for. Now, if we cannot trade up above here, if we try to trade a little bit higher and then falter in here and trade lower, I don't know if we're going to make a run for this low. I would need to see the dollar really show its strength to support a run on cable down here. I don't believe, and I can be wrong, but I don't believe that dollar will stay consolidated and allow cable to trade that far down, because we've already seen such an extension on pound in relative terms to what has been shown in the dollar index. Dollar it's still range bound with a slightly bullish stance. It's just it's very subtle, but I'm not convinced it's going to go lower. So I don't think that the dollar can remain in its consolidation and allow cable to trade all the way down and sweep this low. It would need to see strength on the dollar and break out and then make an attempt to trade up into that SIBI on the weekly. So the catalyst for this low being taken out is that we have to see the weekly SIBI fill on dollar. If you look at the seasonal tendency for British pound, it's choppy going into June, and it's because of the holiday. It's typically, that's what you get this week. There's a lot of money that's sitting on the sidelines right now because it's the first week of summer vacations. A lot of people are taking money and just spending it. Okay, they're not investing it. So that's generally what you see here. And again, it's kind of like the Passover week. You know, when everyone in America or around the world, they call it Easter, but it's really Passover. The that week is kind of like typically the same type of structure. It can be anything, but most of the time it's a week where you don't want to be doing too much, don't risk too much, and don't expect too much. So that's kind of like what I'm expecting here. If we see anything on the upside, this is where we're going to target the buy side liquidity pool. And I'm not calling a low. I'm just saying that this is probably what we'll reach for. If not, we'll just bang around in the range of create this high here and Thursday's low, and really do nothing but just run stops back and forth on a 15 or hourly basis. Speaking of hourly, here's what we have. Mean threshold, last up close candle, bearish order block. It can trade up to there. If we trade through this mean threshold, the liquidity pool resting here is what they would probably want to snatch next. There's nothing down here that I like in terms of support. No discount array except for the liquidity pool resting below the low. So anything down here running below these relative equal lows, I don't think that's going to be like a scenario where it goes here and then higher. I don't see that. If we go below here, it's going to take the low out again. Okay, so I think that it will, if we're not going to go lower, we're going to support the low here on Friday and then run to mean threshold. If it trades through the mean threshold, which I don't know for certain, and again, this is why I'm not touching cable this week, then the liquidity pool here, and then that daily level that we've outlined for the buy side liquidity pool from this high and up here, that is, let's see it again, the old low and old high. That's what these two levels are. I mean, look at it on an hourly chart. That's what these two green levels are. Okay, so anywhere up in here, it could sweep and run. Closer look would take us right over to here. We have relative equal high, so the liquidity pool is resting right above here. So that takes us around that 128 mid figure, which also does what? It gives us another expansion scenario where IPTA can enter another macro, and once it hits the mid figure, it acts just like the big figure, but it doesn't have as much expansion. Like when I'll give you a scenario in mind to help you kind of like digest what I just said. If we ever are below a big figure, like for say cable, like 128 big figure, okay? If we trade up to that, then we have the likelihood of expanding 10, 20, and 30 pips, and sometimes even 40 pips because of the big figure. There's a lot of liquidity. It's above and below old round numbers. It's not a psychological level, it's a liquidity level, it's institutional, because there's a lot of big players that use these levels for entry and stop placement. So if we go to a mid figure, which would be up here, we have that same element, but it doesn't have that 40 pip expansion signature that usually is seen with a 0-0 level. So a 50 level, mid figure, we can see another 10 or 20 pips beyond that. So it could spike up into the 70s. And not run the 80s. But if it runs the 80s, then you have to start thinking, you know, we may have done something more significant on the downside, creating some form of an intermediate term low, and then you have to revisit your analysis and suggest maybe that, you know, we've made a much more significant low in the marketplace. And the reverse is said when it's bearish. So moving up into that at 128.50, that would allow us to clear this level here, and then we have this small little fair value gap right there. So that would be one to watch, which takes us into that 128.80. So it takes us into the 28.80 institutional level, but I'm not that ambitious this week given the economic calendar, the seasonal tendency, and the overall market structure. So, but if we get that erosion on the dollar that doesn't find any support, it just keeps going lower, that would open up the gates for that 128.80 level. Okay, so it would effectively take out the buy side liquidity above here and fill in this inefficiency, trade back to the bearish order block here, which is also this one here. Much larger, big, beefy body candle. Then we have the propulsion candle right here, this last up close candle. That's a propulsion candle. And how do I know that? Because we did not go through mean threshold of the last up close candle, and it's another one that touches this one. Okay, so that's a propulsion candle. If it trades back to that, fills that in, that would be an area where we'd expect to see some kind of a serious profit-taking scenario unfold. But as an upside objective, that's reasonable. And on the 15-minute time frame, you can see our breaker here. Beautiful reaction there. We have price creating that run here. We trade through, come back down in. Price needs to stay above for the bulls, in my opinion. That's why I said earlier when we were looking at the lows on the hourly chart. I don't think if we go below here, it's just going to be a run on equal lows and higher. I think if we go below this low, the bulls are in trouble, and we'll make a run back below here. Okay, so in clearest of terms, it's consolidated, mixed, seek and destroy. It could seek upside liquidity here, and we have a fair value gap in here. Watch these levels. And again, this is that mean threshold of the last up close candle. If we trade through that, then we'll be looking to see the levels I outlined over here on the hourly chart. Okay, and that is all I have for you this week. Again, I will touch base with you on Monday night by way of the forum for the dollar CAD. Anything that is salient for that pair going into Tuesday's trading for filters, and then obviously Tuesday, based on what we do in our analysis on Monday, we'll have some scenarios that would potentially be utilized for studying the rate announcement on Wednesday for dollar CAD. Okay, have yourself a very pleasant weekend. Relax. Try to get some family time in. I'm going to try to do that myself. I will be doing payments today until I said I was going to do it until 4 o'clock, and I realized this morning when I started to do this video that I did the charter members video, and obviously everyone knows the charter member doesn't pay anymore. There's no more payments after you reach charter level. And at the end of their video on Friday, I was telling them what I should be telling you all here is that I'd be doing payments today on Sunday up till 4 o'clock, but I'm going to do it until 5. So if you haven't made your payment for continuation and you make it after 5 today, just know that I'm not going to get to your payments or start processing them until Tuesday morning, 4 a.m. my local time, because I'm celebrating the holiday with my family, and I don't want to be doing anything with the payments. It'll still be early. You'll still have early access, but I just want you to realize that I have a family, I have a life, and I have friends I want to be a part of too. It takes a lot of time, and the people that help me are also doing that same thing. So I can't get to everyone after 5 o'clock today. Just know that if you made your payment after 5 today, I'm probably not going to get to you until Tuesday. So don't freak out. Don't panic. Don't send me emails. I paid. Where's my stuff? Do that, obviously, Tuesday evening if you've paid after today's 5 p.m. But just don't get upset. Don't freak out because I'm not away from the world. I'm just away from the mentorship and the markets for a couple days. Okay. So that's going to be it, folks. I will catch up with you by way of update on Monday night. Till then, wish good luck, good trading.